Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Wednesday, July 24th, 2019. The most interesting thing to report today, at least on the general markets, members, I did an update. You might want to check out the update on wheat, a couple other things in the trading room, and wheat was on the front page, by the way. But as far as the broad markets or the equity markets go, this was the one to watch today. This is RTY. It was covered in last night's video. This falling wedge. So we did get a breakout, and it was impulsive and everything else you want to see. So this is yesterday's chart posted on the site at some point yesterday down here. Looks like yesterday morning. And we were at the bottom of this bullish falling wedge at that 154.16 support, which held. And from there, it's pretty much been a straight shot up. So that was yesterday. Let's see where we're at now. Okay, and then this morning there were a series of charts posted on the site. The breakout occurred right here. At the same time, IWM was starting to break out as well. I'll get to the IWM charts in a second. That is going up here to that 1565 first target before any reaction. From there, we hit that, and I mentioned I'd reverse for a quick pullback trade. I talked about reversing yesterday. You put in one order. It depends on your broker. With Interactive Brokers, you can put an order to both close out your existing long and then put an extra number of quantity of, in this case, and RTY contracts, and it'll turn around and short. When I do that, and as I made it very clear, it was a very quick pullback trade. I was only attempting to game. What I'll do is usually wait for about a quarter point, not in points on the RTY, percentage, whatever it is I'm trading, about a quarter point move, and then set a trailing stop. So we got that. It was we pulled back 0.3%. So I was able to get that quick pullback trade and then get in for the ride for the next move up. And then we have that was, I guess, nope. Oh, I added another level there, which we kind of went through, but I want to leave that there as potential resistance or support now. That was at 1573. I tried another pullback trade there. That one didn't work because we had a consolidation there. Actually, we consolidated for a little while around 1573, but we didn't get at least a quarter point pullback. Powered on through, and then that took us up to well, I posted this before the close today. Let's see, try to center that chart for you. About an hour or so before the trading, we still had more upside. This was the target yesterday and before, and those other charts covered 1582 right there. And let's go to the updated chart and we'll see what happened. So we hit it. We overshot it by just a hair. You can see that 1582 level. It's rounded off. It says 1581.92. So that's that 1582 in RTY. And this is what I refer to as most like a momentum-fueled overshoot. So you can see here we had some, we had reactions on each of those points. Let's try to circle that there. Get a circle tool here for you. We had the pullback trade there. Circle tool is not wanting to load here. We did have that reaction also on the 1573 level. In fact, each of these levels that I added, that's where you can see the breaks in these 60-minute candles. And then that was it. The final target was hit today. So what I said on the site, if you, one of two things, you can either, set a tight stop, raise your stops at this point to protect profits and let your winners run, either a tight trailing stop or just a tight hard stop somewhere just below this level. I would say, and that's why I gave you this level at 15, there's that other level I added, 1578.80. That should act as support on a pullback if this breakout's going to stick. But I like the simplicity and the beauty of, I've been in day trading mode. Yesterday I told you, and I posted several day trades in real time on NQs, and today was this. This is, to me, a day trader's market right now for the indexes. We have, as I've stated repeatedly, a slew of heavy potential market moving earnings reports coming out tomorrow after the close. We have in the morning, I believe it is, durable goods, employment data, then we have GDP on Friday. So what happens is this market giveth, this market taketh away. And I like the benefits of just going flat to cash, getting in, getting out. When you see these day trading ops, you can see that even IWM within this trading range has been a very tradable security. You can see all these trends right here. In fact, let me show you a chart I shared in the trading room today. Here's this one here. This shows you IWM. That's that same trading range on a 15-minute chart. And it just tells you that lately that's what this market has done. You can see all these trend lines, and they're pretty clean. And that's where the trends have been, the trades have been, and they're very quick trades. They're, all along, from a swing trader or investor's perspective, IWM's gone nowhere. It's been grinding around all month. That's since this is July 1st right here. It's the start of the month. But yet there's been these micro trades, and of course this one went farther than these. Why? Because it was a bullish falling wedge breakout that was highlighted on the 60-minute charts. So therefore you're going to get something comparable to this move or this one so far that we had today, instead of these little hit and runs. But again, that's where I kind of put on the day trader hat a little more when I don't want to take home swing positions, because going back to what I said on IWM, you can see, and by the way, that from the breakout point, that's a 2% rally in RTY. So and even more so from the bottom on support if you bought it down above the 1544 support, which I just now moved that line. Whatever, that'd be closer to 3% or so. So congrats to those that caught it. And again, I like the ease of just, you can certainly let that ride, but what I said, the benefit of closing a trade out before the close, especially our IWM, because somebody had asked me specifically regarding IWM, my thoughts on that, whether it's a short. And I said this, look, if you short it here, IWM overshot the 156.56 target, but again, as I showed you on those other charts, the RTY, which are the futures, they came right up to that level, or the resistance level. So that's why you want to correlate both charts. So now, is it an objective short here? It's an overshoot. Maybe, but here's the thing. Number one, it overshot this, or 156.56 target, and that's and it did it pretty impulsively as well. So if you look at this, that was that powerful, trading range, which I said it's coiled energy. It's like a coiled spring when you have a trading range. So you've broken out of it. And that could set the stage. I said in yesterday's video that IWM, the small caps, appeared poised to play a game of catch-up to the large caps. Just as I, a few weeks back said silver was poised to play a game of catch-up to gold, and that's what's happening. So if there's more, IWM still well off the highs. This is just a 60-minute chart. That's not the all-time highs. They're a lot higher. So IWM, in other words, has a lot more upside if it wants to continue to play that game of catch-up. So would I go home short? No. And there's the problem too with IWM as an ETF. You can't put stop loss orders in after-hour trades. You can put stop limit orders, and they may get bypassed. Stop loss orders only work during regular market hours. And so what can happen on IWM, especially as I said in the reply to that member today, with that heavy earnings calendar tomorrow after the close and a lot of economic data coming out, you can gap down and give back some or even all of those gains in the blink of an eye, and you cannot control that with an ETF. As I just said, you can't set a stop loss order, nor do they even trade around the clock. So even if after hours trading session allowed for stop loss orders instead of stop limit orders, it would do no good, because that trading session stops tonight, and then all night the futures are going to keep trading, and then you would open up up or down tomorrow in IWM. So just want to kind of share my thoughts there, that two schools of thought on it. Again, you can set any trade, set stops, let it run, let your winners ride. That's trading 101. And in a normal environment, if I were longer term bullish, I might do that. But again, as I said yesterday, the measured target and my target was the widest part of the wedge to the breakout, which brought me right up to that level. And so that's it. So let's move on. Where it goes from here, I don't know. I wanted to share this. This is a good point. A member of the site told me, Michael, forget the numbers behind on his username, he pointed this out to me, a nice downtrend line off the highs in IWM that I had missed until he had mentioned that. So thank you, Michael. There's that first reaction, second reaction right there, third reaction, and now a fourth. Well, not a reaction yet. We stopped there. We could continue on through it, and if we do, and if you want to know if you're riding this one up for a little bit more, you think that the small caps are going to continue to play catch up, then 159.41 would be it's a pretty big level too. That would be my next target. And then so if you get something like that, maybe hit that level, pull back at a back test. There's a potential uptrend line. It's not well defined. So enough on IWM. Again, I usually don't do so much coverage on the small caps, but I go wherever the developments are, and in the in the public YouTube videos like I'm doing now, it's limited to coverage of the broad market, so that's what we'll stick with. QQQ, again, nothing new technically significant. We had the breakout, the back test of 191.46. We're still above it. The divergence is still very much intact. I mentioned recently we had a bearish PPO crossover. That's probably still intact. Yep, histogram still red, meaning that bearish PPO crossover is still in play there. But again, this changes after tomorrow. Tomorrow, I suspect the markets will grind around flat, a little down, a little up, maybe both, a little of both intraday, and then we'll see after all those big earnings come out Thursday night. We'll see how things trade on Friday, and so the levels to watch are the ones that I highlighted before, the recent lows right here to see if this breakout fails, or the bullish case has us building on those gains and then taking out or wiping out these negative divergences, which as of now are still intact, and that's still opens a door for a pretty swift move down should we get a failed breakout, should we drop below the recent lows right here on QQQ impulsively, big candle down through there. I'm eager to see short interest. It comes out, they release short interest only twice a month, and there's a severe lag on it. I'm waiting to see the short interest data as of the end of it's actually the reporting period of July 15th. So yeah, mid-month short interest will come out, and I'm eager to see what that looks like, because the lower they've cleared out short interest, the bigger the drop in short interest, the faster the markets can fall. When you have a high level of short interest, you have a lot of shorts that will come in and buy to cover on the dips. They take profit and they cover. So it's all other things being equal, you want to see the market or an index or a particular stock. If you are bearish on it, you prefer to see very low short interest or a considerable drop off. So I'll have to check that. I don't think it's out yet. It's supposed to be out any minute now. I didn't pull it before the video. Let's just wrap this up with a look at the 60-minute charts. So again, as I've said, the trend is up without any sell signals. There's been no mistaking that. But nothing much has changed in the technicals. We broke this wedge right here. We came in, hit the gap. There's gap support there. We tested it successfully twice, which also kept a successful test of the recent breakout. And really what this market's doing now, it's trading with these little trends. So here's a little trend line. This is the one to watch tomorrow if you want. So what I see, other than maybe if IWM comes back below those resistance levels, or RTY, the small cap ETFs, there's a potential maybe a day trading op on QQ or NQ here. I'll have to pull NQ in a second and see. And that would be on a break of this trend line here. So you can see the bigger picture, the divergences are still very much intact. Remember, we had small bullish divergence here at that recent double bottom low, and that was the technical catalyst for this rally here. Pretty strong negative divergences right there. Small, but clear. And then on SPY, let's see, we have similar uptrend line, and there it is. So you can see these are, the micro trends, I call them right now, like I showed you on IWM on that 15-minute chart a minute ago. Little micro trends, they're good for quick day trades. So tomorrow, if this trend line breaks, or remember, you want to be, if you're going to trade the ETFs, you have to make that decision whether you want to go home long or short in front of all those earnings that come out tomorrow night after the close. But if this breaks intraday, there might be a day trading op. Let's look at the futures, and that'll sometimes give us a little bit clearer levels. So I'm going to zoom in here. I just loaded NQ, the NASDAQ 100 futures 60-minute chart, and so at this point, you add a divergence line, because this divergence down below is still, again, very much intact. We're just seeing a series of lower highs in the indicators, with prices making a series of higher highs. That is the definition of negative divergence. So there it is. Pretty steep uptrend line right there. Probably want to pull maybe a 5-minute chart to zero in on an entry there. But you can see these steep trends. This is what the market's doing. It's doing these sharp up and down trends, so you can day trade these, short-term swing trade it, and sooner or later the market will pick a direction and clear out. But when you take a step back And we'll do that here with the futures. Zoom out a little bit, and you can see we're kind of grinding around lately. You know, grinding. It's an upward grind, no doubt, but it's in the last couple weeks here. This is or last couple months really. This is what we're doing, is moving around in here. All right, one more ES, and that will conclude the update on the markets. I just showed you NQ. This is ES. Let's zoom it in a little tighter. You can see an almost equal high. Again, any marginal new high, even if you have an equal high and the indicators are making lower high, that's divergence. But again, we'll see what happens tomorrow. Here's a minor uptrend line. I'm just trying to see if we'll have any, well, we won't know till overnight. So I'll watch the futures overnight. Right now, like I said, I think it's a good time to go home, keep things light into at least the end of this week, and Friday we'll see how things go, and maybe early next week if Friday doesn't give us a lot of clues to where we might be headed. But that's it. That's the levels. Again, not a lot to report on ES and NQ. I'll move that trend line right here. You know what? Let me do that for you. As I look at this chart, that trend line needs to be extended right here. There it goes. Okay, so there's a potential trend line. And again, these are micro levels. If you're a trend trader or a swing trader, I don't have much for you today. I won't have much anything until probably next week at best, until this market kind of wakes up and gets out of this back and forth grind. So again, right now or until things change, it's just these micro trends that you can swing trade or day trade, and sooner or later things will open up. But again, my focus remains elsewhere, looking at the markets are certainly a part of what I trade, but then it's a relatively small part, or just one piece of the pie, with commodities and individual stocks. I've done a lot of sector analysis, highlighting a lot of trade ideas in various sectors lately and things like that. And that's where my focus will continue to be. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.